Okay, we will be learning about reserves now. Okay, so now what is reserves? Okay, what is reserves? So you are earning some profit. So usually what happens is you are earning some profit, and then this profit is distributed to their partners, individual partners. So these are partners. Okay, firm has earned a profit and this is distributed to individual partners. Okay, now what happens is, let's say that firm wants to keep some amount, some portion of profit for its future expenses or something. Okay, so what firm will do is, out of profit earned over here, okay, this is a firm, this is a profit, it will transfer some profit to the reserve account. Okay, it will create a reserve of that profit, and once this is done, whatever is the balance after deducting reserve, that profit, balance profit after reserve, will be distributed to partners. This is partners and it will be distributed to partners. So now if you see here, again reserve is created. Okay, reserve is like a distribution of profit, but it is not given to the partner. So reserve is always created in your profit and loss appropriation account. So now see, for creating a reserve, okay, reserve is like some portion of profit which should have been given to partners. It's kept by firm. So from firm's point of view, reserve is a liability. Okay, reserve is similar to capital account, but just that profit is not yet distributed to the partner. So firm has kept that profit, okay, of partners, okay, for meeting some future expenses. Okay, so reserve is like a liability for the firm. So that reserve is a liability, is like a liability for a firm. Okay, because that is the profit which belongs to partner. So instead of distributing that profit to the partner, firm has kept it with itself. So reserve is like a liability, and so it will have a credit balance. Okay, so your journal entry will be profit and loss appropriation account debit to reserve account. So whatever reserve you are creating, you will be creating it using profit and loss appropriation. After creating reserve, whatever is the balance profit, that will be distributed to partners. Now understand, there are two types of reserve. So one is free reserve and some are specific reserves. So specific reserves, as the name itself suggests, specific reserves are created for some specific purpose. Okay, so specific reserve, we will be using those specific reserve only for specific purposes. For example, there will be workmen compensation reserve. So this reserve is created, okay, and it will be used only if there is some claim, okay, claim from workmen, okay, claim from some workmen, and we have to compensate it. Only then we will be using this reserve. Okay, then one more reserve is investment fluctuation reserve. So investment fluctuation reserve is also a specific reserve. So investment fluctuation reserve is used whenever there is a reduction in the value of investment. Okay, you will be using this reserve. Now there will be some free reserves. So what are the free reserves? Free reserves will be general reserve. Okay, now general reserve can be used for any purpose. Okay, it's a free reserve. Okay, one more is you will keep the amount in profit and loss account itself. So profit and loss account, and if it shows a credit balance, it is a kind of reserve. Instead of creating other reserve, you will keep it in the profit and loss account, which is showing a credit balance, and then the balance profit will be transferred to partners. Okay, any doubts here? Question number 31 now. Okay, 31 is, see, A, B, C were partners in the firm, sharing profits and losses equally. Okay. Their respective capitals were 10 lakhs, 9 lakhs and 8 lakhs. So when they say respective, you already know, right? Capital of A is 10 lakhs, B is 9 lakhs and C is 8 lakhs. The partnership deed provides for the following. So partnership deed is providing for this, that interest on capital should be 9% per annum. Interest on drawings is 12% per annum. Okay. Interest on partners loan to firm. So this is loan by partner to firm should be 10% per annum. Okay. So during the year, B had withdrawn 20,000 for the personal use. So B had withdrawn 20,000 for his personal use, and on 30th September, A had given a loan of 70,000 to the firm. So we are required to pass the necessary journal entries in the books of firm for the following, okay, for the year ended 31st March 2022. So we have to pass all these journal entries in the books of firm. So what are those journal entry? Allowing interest on C's capital. So see here, sometimes the question will be very specific. Okay, question will be very specific, in which they will ask you to pass the journal entries only for the specific transactions. In that case, you just have to follow the question. Whatever they are asking you, that much journal entries you have to pass. Okay, you need not pass any other journal entries. Okay, now allowing interest on C's capital. Okay, that is first entry. Providing interest on A's loan. So we have to calculate what is the interest on A's loan, and we have to provide for that. And then charging interest on B's drawing. Okay, also give the transfer entries in profit and loss account and profit and loss appropriation account, as the case may be. So for these entries we have to pass the journal entries, okay, as well as we have to see the transfer entries also. So prepare. So here, see here what you will write it. See, this is a partnership firm. Okay, so there are two options. You can write journal entries in the books of firm. Or if the firm name is given, you can write that firm name, or you can write it as journal entries in the books of A, B and C. Okay. Now let us write all the journal entries. Now see, here they are specifically asking you to pass only this many entries. So we will be passing only this many entries. Okay. So first is allowing interest on C's capital. So how much is the C's capital? C's capital is, you can see here, 8 lakh rupees. Okay. Now interest on capital is 9% per annum. So if nothing is given, we are assuming that this 8 lakhs was there since the beginning of the year, and we will be charging the interest on capital at the rate of 9% for the entire year. Now what is a journal entry for the interest on capital? Journal entry for the interest on capital. Interest on capital is like an expense of the firm, correct? And we have to give it to C, correct? Now see here, one thing you remember, if nothing is mentioned in the question, okay, if nothing is given about the method of capital, that is whether it's a fixed capital or fluctuating capital, then we will assume that it's a fluctuating capital method. Okay, and we will transfer all those entries to their respective capital account. Sometimes in the question they will be giving that they are following a fixed capital method. Then in that case you have to transfer, or you have to post those entries in their current account. Now read the question and see if there is a mention of the fixed capital method. If there is no mention of fixed capital method, we will be transferring it to your capital account. Okay, because it's a fluctuating capital method. Okay, now calculate the interest quickly. It is 8 lakhs into 9%. So, and what is the journal entry of interest on capital? Interest on capital is like an expense. So, the journal entry will be interest on capital account debit to whom are we giving this interest? We are giving it to C. To C's capital account. Okay, and so being interest on capital allowed to see at 9% per annum. So how will you calculate this? 8 lakhs into 9%, correct? So that comes to how much? 72,000. Did you understand this? Any doubts here? So now second entry. What is the second entry they are asking us to do? Second entry is providing interest on A's loan. So see here. Loan. What are the details of the loan? On 30th September 2021, A had given a loan of 70,000 to the firm. So this loan was given by A to firm. So this is loan by partner. How much is that? 70,000. It was given on 30th September. And interest on partner's loan is at 10% per annum as per the partnership deed. Okay. So now see here, the loan was given on 30th September. Okay, so calculate the interest. I'll give you 2 minutes quickly. Now I want the answer. So see here, see, loan was given on 30th September 2021. Okay, so interest is calculated at 10% per annum. So interest will be 70,000 into 10%, and loan was there till, see, we are passing the entries for year ended 31st March 2022. So all these entries are on 31st March 2022. Okay, if you write the dates of this entry, these are 31st March 2022. Now loan was given in September. So what are the days? How many days it was there? October, November, December, Jan, Feb, March, 6 months. So interest on the loan will be 70,000 into 10% into 6 by 12. Okay, so 70,000 ka 10% is 7,000 into 6 by 12 is nothing but half of 7,000, 3,500. It's so simple. Now what is the entry? Now this is the loan which is given by partner. So I have to give the interest. That is, when I say I here, I am firm, because I am in the books of firm. I have to give interest. So the entry will be interest on loan by partner account debit, okay, to loan by partner. Either I can add it to loan by partner account, or I can create a separate outstanding interest on loan by partner account. But it's not necessary to create one more account. You can just add it to loan by partner account, because there is already loan by partner account which has a balance of 70,000. Just add the interest payable to that account itself. So being interest on loan payable at 10% per annum for 6 months, correct? So how will you calculate it? 70,000 into 10% into 6 by 12. So that comes to 3,500. See, for small calculations, you don't have to prepare any working note. You can just show the calculation along with the narration itself. Okay, in the narration itself, you can explain what is the calculation. You need not prepare any working note. Okay, so this is second one. Now the third one, charge interest on B's drawing. Now see here, B had withdrawn rupees 20,000 for his personal use. Now see here, in drawings we have learned about irregular drawings, regular drawings. Okay, now is this a irregular drawing? I don't know. They have not given me any time period when that 20,000 was withdrawn. They have just given me that annually this 20,000 was withdrawn. Okay, so I don't know whether it's a regular drawing or irregular drawing. So in that case, you remember we had discussed it on that day. If the lump sum amount withdrawn in that particular year is given without any date, remember this, without any date, then we are assuming that the amount is withdrawn evenly throughout the year. So your interest on drawing will be, how much is the rate of interest on drawing? 12%. So it will be 20,000 into 12 by 100 into 6 by 12. Why 6 by 12? Because it is withdrawn evenly. You remember, I hope you remember that interest on drawing, we had written that point also. Okay, at last, below interest on drawing. So whenever a lump sum amount withdrawn by the partner is given without any details of date, then we are considering that they are drawn evenly. When you say evenly, the interest will be always into 6 by 12. Okay, so let us calculate the interest, and what will be the entry? Interest on drawings is like an income for the firm. Correct? Interest on drawing is like an income for the firm, and we have to take it from whom? We have to take it from B. So we have to take it, firm has to take it from B. So it will be B's capital account debit to interest on drawings account. Okay, being interest on drawing, okay, charged. When the firm is taking something, you have to say charge, word charge. Charged at, how much is the interest on drawing? 12% per annum. 12% per annum. So how much is the drawing over here? 20,000. 20,000 is the amount of drawing over here. So interest on drawing will be 20,000, okay, into 12%, that is 12 by 100, into 6 by 12. This 6 by 12 is important. Most of you will make this mistake. You will directly charge the interest at 20% into 12%, like the way you do it as for interest on capital. No, for drawings you have to follow this rule. Okay, 6 by 12, don't forget this 6 by 12. When the lump sum amount of drawings is given without the date of drawing, remember that. So now, how much is that? 20,000 into 12% is 2,400. Correct, na? And into 6 by 12 will make it 1,200. So 1,200 is interest on drawings. Okay. Now what I need to do? I need to pass some closing entries also. Correct? Closing entries for all this, because last they have told me that also give a transfer entry. Transfer entry is nothing but closing entry. So whether it will be transferred to profit and loss account or profit and loss appropriation account. Okay. So now first is what? Interest on capital. Now interest on capital, I have already told you, it's a distribution of the profit. So it will be transferred to profit and loss appropriation account. Now interest on capital has a debit balance, so we will credit it. So profit and loss appropriation account debit to interest on capital account. How much is that? 72,000. So narration you can write, being interest on capital transferred. You can write it fully, okay? Don't write IOC. Okay. Now next is interest on loan by partner. See, I have told you loan by partner is your expense. Loan by partner and rent is expense. So it will be transferred to your profit and loss account. So interest on loan by partner will be transferred to profit and loss account. So on 31st March 22, okay, we will transfer this. So it will be to your profit and loss account. So profit and loss account debit to interest on loan by partner account. How much is that? 3,500. Being interest on loan by partner transferred. Done. Now the next thing, B is capital to interest on drawings. So interest on drawings is also a profit and loss appropriation item. Okay, so interest on drawing has a credit balance, so we will debit it. So interest on drawings account debit 1200 to profit and loss appropriation account 1200, being interest on drawing transferred. Okay, let's read it. Arun and Barun were partners sharing profits in the ratio of 3:2. Their capitals were 50,000 and 30,000 respectively. Partnership deed provided interest on capital at 6% per annum to Arun and Barun and quarterly salary of 1,000 to Barun. So only quarterly salary is only to Barun, it's not to Arun. Arun had given a loan of 1 lakh on 1st October 2021 to firm without any agreement about the interest. So there was no agreement about the interest as such, but Arun had given the loan. So Arun is a partner. He had given the loan to the firm. So this is loan by partner. Correct? How much is loan by partner? 1 lakh rupees. Now for the year 21-22, the profits earned were 26,800. So profits earned were 26,800 for the year 21-22. So this is your net profit as per your P&L account. Okay. Now what are they asking? Prepare profit and loss appropriation account of the firm for the year ended 31st March 2022. So we are supposed to prepare profit and loss appropriation account of the firm for the year ended 31st March 2022. So prepare a profit and loss appropriation account for around 10 lines. So as I told you, how will you write? In the books of firm. You will always write it as in the books of firm. Profit and loss appropriation account. So in appropriation account, what do we record? We record distribution of profit. Done? Done drawing the format? Okay. Now listen here. Listen here carefully. See, profit and loss appropriation account. What is the process that I told you? That net profit, whatever we calculate it in your profit and loss account, we have to transfer it to profit and loss account. So profit and loss appropriation account. So profit and loss appropriation account is also like your profit and loss account only. Only thing is, in profit and loss appropriation account we include interest on capital, interest on drawings, partner's salary, partner's commission, and then if there is any amount which is transferred to be the reserve, we include that, and then we distribute the balance profit. So now this is a profit. So profit will be transferred on the credit side of profit and loss appropriation account. Now pay attention over here. So here I will write, we are transferring it from profit and loss to profit and loss appropriation. So I will write it as by profit and loss account. Now pay attention over here. See here. Now there is some loan. So whenever there is a loan by partner, even if there is no agreement about the interest, as per the provisions of Partnership Act, you are required to give interest at the rate of 6% per annum. Now while calculating this profit of 26,800, this interest on loan was not deducted. Okay, this interest on loan was not deducted. How do I know? Because it is written without any agreement about the interest. So partners are not agreeing about giving him the interest, but they are not allowed to do so because Arun has given loan to the partner, and it is one of the right of the partner. When the partner, we have seen, right of the partners. Okay, keep on reading it. Okay, otherwise you will not be able to recollect it. Right of the partner, last point we had read, that whenever the partner advances loan to the firm, he is entitled to get an interest at the rate of 6% per annum. So this loan ka interest we have to reduce it from the profit. So now here itself I will do the working, because they are not asking me to prepare profit and loss account. They are directly asking me to prepare profit and loss appropriation account. So what I will do is 26,800 is the profit minus interest on loan. So how much is the interest on loan? See, let us calculate that. Interest on loan, see, 1 lakh is the loan given. It was given on 1st October 21. So till 31st March, how many months are over? October, November, December, Jan, Feb. So October, November, December, Jan, Feb, March, 6 months. So your interest on loan will be, let us calculate this. So 26,800 minus 1 lakh is the loan into 6%. See, now nowhere in the question it is given that interest on loan should be 6%. That is understood. That you will be able to recollect only if you keep on reading these notes. Okay. So into 6% into 6 by 12. Why 6 by 12? Because loan was taken only for 6 months. Okay, this, what is this? This is a interest on loan by partner. So after this you can just draw a cloud over here for yourself and write, don't forget. Okay, don't forget, it is in the right of the partner. Rights of partner, it is there in the rights of partner. So don't forget this. So now how much is the interest over here? Calculate the interest. So at 6% it will be 6,000. So we are taking it for 6 months, so 3,000. So 26,800 minus 3,000. So you get 23,800. Okay. Now we will see what are the other things. So interest on capital at 6% per annum. So we have to give them interest on capital. So interest on capital will come on the debit side of profit and loss appropriation. So to interest on capital. You remember, right? Interest on capital is like an expense. So we transfer it to profit and loss appropriation debit side. So whenever they are asking you to prepare profit and loss appropriation account, you should be very, very thorough with the entries. Okay. Because you will not waste time in writing the journal entries, then figuring where it will be transferred. You should be very, very thorough with the entries. So even if they are not asking you the adjustment entries, you should know that in closing entries it is transferred to profit and loss appropriation account debit side. So it will come over here. Okay, there can be any permutation combination of the question. Sometimes they may ask you journal entries, sometimes they may ask you to only to prepare P&L appropriation account. So you should be very, very thorough with the basic entries. So first is Arun. So in this case, see how you present it, understand this. So Arun, how much is Arun? Arun has a capital of 50,000. So 50,000 into 6%, you will be writing that amount in the inner column only. And then total you will be taking it to the outer column. So 30,000 into 6%. Okay, so let us calculate this. So this comes to 3,000 and this comes to 1,800. So total interest on capital, I will take it to outer column, 4,800. Okay, now next, what is given? quarterly salary of 1000 to Barun. So only Barun is given salary. So to partner's salary, again partner's salary is like an expense, so it will come on the debit side. So whom it is given? Barun. How much is the salary? 1000 in every quarter. So how many quarters are there in the year? 4 quarters. So 1000 into 4. So salary comes to 4000. Now there is only one partner, so I will directly write it in the outer column itself. Okay, to interest on capital account, to partner's salary. Okay, so now once this is done, now what you are supposed to do? We are supposed to close this. Okay, and whatever is the profit, let us first calculate the total profit. So here if you see, how much is this? 23,800. Correct? 23,800 and 23,800. So what is the amount of profit? Tell me the amount of profit. 23,800 minus 8,800. Correct? How much do you get? You get 15,000. Now pay attention over here. See, total profit is 15,000. Okay. How will you distribute? See, if the profit sharing ratio is given, you will distribute it in that profit sharing ratio. If the profit sharing ratio is not given, then you will distribute it equally. Now let us look at the question. So profit sharing ratio is given. Correct? Profit sharing ratio is how much? 3:2. So I will distribute this 15,000 in the ratio of 3:2 to Arun and Barun. So I will write it as to profit transferred to partner's capital. Okay, and in that I will write it Arun. How much will Arun get? 15,000 into Arun, what is 3:2 now? So Arun's share is 3/5. So 15,000 into 3/5. And Barun, how much is Barun? 15,000 into 2/5. Correct? So this comes to 9,000. So Arun will get 9,000. Barun will get 6,000. So this will be credited to Arun's and Barun's capital account. Let us read it. So Sonu and Rajat started a partnership firm on 1st April 2017. So Sonu and Rajat, they have started a partnership firm on 1st April 2017. So they contributed 8 lakhs and 6 lakhs respectively as their capitals and decided to share the profits in the ratio of 3:2. So you can just mark the profit sharing ratio always in the question so that you remember that. See, 8 lakhs, 6 lakhs is capital. Why will you use this? To calculate interest on capital. The partnership deed provided that Sonu was to be paid salary of 20,000 per month. Remember, salary is 20,000 per month, and Rajat a commission of 5% on turnover. What do you mean by turnover? Sales. Okay, so Rajat will be getting a commission of 5% on turnover. It is also provided that interest on capital be allowed at 8% per annum. Okay, so interest on capital is 8% per annum. Sonu withdrew 20,000 on 1st December and Rajat withdrew 5,000 at the end of each month. Now this withdrew means this is drawing. This is not withdrawal of capital. Understand, for withdrawal of capital they will be specifically mentioning that he has withdrawn the capital. Okay, otherwise whenever they are saying it withdrew, it's a normal drawings. It's not a withdrawal of capital. Understand the language properly. So why they have given this? To calculate interest on drawing, obviously. So we are given interest on drawings was charged at 6% per annum. The net profit as per profit and loss account for the year ended 31st March 2018. So always remember, your accounting year is what? 17 to 18. That is 1st April 17 to 31st March 18. It will always be from April to March. The turnover of the firm for the year ended is 20 lakhs. So why is turnover given? See, Rajat's commission is 5% on turnover. So we have to calculate this Rajat's commission, okay, at 5% of turnover. So pass the necessary journal entries for above transaction in the books of Sonu and Rajat. So when they are saying in the books of Sonu and Rajat, I will use same thing. Journal entries in the books of Sonu and Rajat. I can write it like that instead of writing in the books of firm. Now see here they are saying pass necessary journal entries. So you are required to pass all the journal entries. Okay. In first question, whatever we solved, they had specifically asked for some journal entries. They had given the transaction. They asked you to pass the journal entries. When they say pass necessary journal entries, you have to pass all the journal entries. That is, whatever transactions are given, for all those transactions, we will be passing the journal entry. That is salary, then partner's commission, interest on capital, interest on drawings, and then transfer entries also. Okay. So let us prepare a journal entry format. Journal entry format of how much? Journal entry format of around 1.5 page you prepare, and followed by we will be we will be preparing a profit and loss appropriation account, okay, as a rough note, as a working note. Why do we need a profit and loss appropriation account? Because there is a large journal entry of distribution of profit. Okay. Now this is a net profit as per P&L. From this we have to deduct interest on capital, partner's salary, partner's commission. We have to add interest on drawing to get that final profit which needs to be distributed to the partner. For that we have one journal entry. Correct. So what we will do is we will prepare a journal entry format of 1.5 page, and then this profit and loss appropriation account as your working note. So the first journal entry is of salary of 20,000 per month. See, we will go sequentially. Whenever the question is in paragraph format, it's better to go sequentially. So they contributed 8 lakhs and 6 lakhs as capital and decided to share profit and loss in the ratio of 3:2. So we are not going to pass this entries. We will start it from partnership deed, provided that Sonu was paid a salary of 20,000 per month. So how much is the Sonu's salary? See, they have started partnership on 1st April. So Sonu's salary will be 20,000 into 12. That is 2,40,000. So let us pass this first entry. So this will be on 31st March 2018. Okay. So partner's salary account debit to, we are giving salary to whom? We are giving salary to Sonu. Now they have not mentioned if it's a fixed capital method or fluctuating capital method. So we will assume that it's a fluctuating capital method, and we will credit partner's capital account. Now which partner here? Sonu. See, you don't write partner's capital account, okay? That's a specimen entry. Whenever you have a specific partner, you have to credit it to that particular partner's account. You cannot say partner's capital account. There is no such thing as a partner's capital account. Partners means which partner? Which account will you credit? So it goes to Sonu. So Sonu's capital account. And how much it is? 20,000 into 12. So being salary payable to Sonu, okay, of rupees 20,000 per month. Write the narrations properly. Narration also has marks, okay. See, whenever you are doing it correctly, na, to get that good mark. See, going from 75 marks to 80 marks, 75 out of 80 instead of 75 out of 80, if you want to get 80 out of 80, these are the things, okay, otherwise they'll cut your marks over here, okay. So write the narrations properly. They should not get any opportunity to cut your marks. So 2,40,000. This is the first entry. Next, what is the second? Rajat commission. So let us give commission to the Rajat. So 31st March 18. Okay. What is it? Rajat's commission. So partner's commission account debit. So we have to give commission to whom? To Rajat. So 2 Rajat's capital account. And how much will that be? See, 5% of 20 lakhs. Correct? 5% of 20 lakhs. So that comes to 1 lakh. Being commission given to Rajat at 5% of 20 lakhs. They are saying, right, commission has to be on turnover. So turnover. So 20 lakhs ka 10% is 2 lakhs. So 5% will be 1 lakh. Okay. Now, it is also provided that interest on capital be allowed at 8% per annum. So, interest on capital is how much? 8% per annum. Now, interest on capital needs to be given to both. Who are two people, Sonu and Rajat. So, interest on capital is also like your expense. So, your journal entry will be interest on capital because it's an expense. So, debit it. Interest on capital account, we are giving it to both. So, to Sonu's capital account, to Rajat's capital account. Okay. Now, see how much is the interest over here. It is 8%. Correct. So, Sonu will be 8% of 8 lakhs and Rajat will be 8% of 6 lakhs. Okay. Okay. So I'll just write it over here for your reference. So 8 lakhs into 8% and Rajat will be 6 lakhs into 8%. You can also write this calculation. Okay. So this comes to 64,000. So total is being interest on capital allowed at 8% per annum. Yes. Done till here. Next one. 31st. Let us see what is the next entry now. See, interest, we have done till interest on capital. Okay. Now, Sonu withdrew 20,000 on 1st December and Rajat withdrew 5,000 at the end of each month. Interest on drawing was to be charged at 6% per annum. Okay. Interest on drawing was charged at 6% per annum. So, now we have to calculate interest on drawings over here. Okay. So, let us calculate the interest on drawings first. That will be your working note number 2. After this, so this is your working note number 1. Okay, as I told you, whenever there are complicated calculations, you can put it in the working note. So this working note number 1 is nothing but your profit and loss appropriation account. You will be preparing it to calculate what is the final profit. Now working note number 2 is for your interest on drawings. Okay, let us see that interest on drawings. So interest on drawing, first Sonu. Okay, so Sonu has withdrawn on 1st December. So it will be December Jan, Feb, March for 4 months. Correct. So Sonu. So I'll just write interest on drawings. Sonu 20,000 into 6% into 4 by 12. Correct, right? Let me just check the amounts over here again. Yeah, 20,000 into 6%. Why 6%? They are given. Into 6% into 4 by 12. How 4? December, Jan, Feb, March. So whenever they are giving, remember in previous question they had just given how much was the drawings. They did not give the specific date. In that case we will take it as 6 months. But when they are giving us the specific date, okay, so this is like a irregular drawing. He doesn't withdraw it every month or every quarter. He's just withdrawn it once on specific date, that is 1st December. So we will be charging him interest from 1st December to 31st March. Okay, and Rajat, first we will do it. Rajat at the end of each month. So Rajat is a regular drawing at the end of each month. So let us calculate 5,000 at the end of each month. So for Rajat, it is 5,000 at the end of each month. Correct? End of month, rupees 5,000. Now see, we have to calculate average period. So average period is not, see, if it is a regular drawing, we always have to calculate average period. End of each month. So he has first drawing. So when was the first drawing? First drawing was on the 30th April. So 30th April to 31st March, it was 11 months plus last drawing was on March only. So it is 0 divided by 2. So that gives me 5.5 months. Okay. So now interest on drawing for Rajat will be 5,000 is per month into 12. This is total drawings for the year. Into rate is 6%. So 6 by 100 into 5.5 by 100. Okay. Now calculate what is the amount for both of them. Quickly. I hope you are able to recollect this. All this we have already done. Don't get confused. Interest on drawings is like, see, it's easy, but kids get confused. Okay, students make a lot of mistakes in interest on drawing, especially when you have to calculate average period. Average period is simple. From date of first drawing till the end of year, last drawing till the end of year, divide by 2. Okay, especially when it is a regular drawing, average period. Remember that formula correctly. Okay, sorry. Here it's not 5.5 by 100, it's 5.5 by 12. Nobody noted the mistake also, huh? So interest on drawing will be 5,000 into 12 into 6 by 100 into 5.5 by 12. Yeah, how much are you getting for both of them? Calculate it fast.
Mom, why exactly are you taking 5.5 by 12 and not 5.5 only?
Because it's 5.5 months, no? Average period is 5.5 months.
Oh,
We calculated this, no? When we did that regular drawings. Average period by 12. Because this is months. So your rate is percent per annum, correct? So when I want to calculate it proportionately, I will divide it by 12. Same logic. Whatever you did it here, no? Here that specific period was given and it was only one drawing. Correct. But here it is regularly withdrawn. That is why we take average period in the numerator. So if you look at the logic of the formula, it's same. Total drawings during the year into rate into average period by 12. There it is actual period. Here it is actual period. Because we know what is the actual period and it is a irregular drawing. Whereas here it is a average period. Clear?
yeah, yes, ma'am, clear.
Now whatever, when you have submitted the test, so whatever mistakes you have made in the test, now just go through that. whatever calculation errors and all that. Okay, you need to keep on practicing this, otherwise you'll forget. So most of the students can get confused between interest on capital and interest on drawing. That calculation is completely different. Okay, so you have to remember it properly. Okay, how much is the amount for both of them? Okay, 1650 is correct. And what about this one, Sonu? Yeah, fast. How much is for Sonu? 400. Yes. So now let us go to interest on drawings entry. Neil, you are not calculating. I want answer from you also. Okay. Now interest on drawing, what is the entry? Interest on drawing is like an income. So on 31st March 18, you are going to charge this drawing from the partners. So Sonu's, you have to take it from partners. So Sonu's capital account debit, Rajat's capital account debit to interest on drawings account. Okay, so one was 400, Sonu was 400, Rajat was 1650, right? So what is the total? 2050. Being interest on drawing charged. Whenever firm is charging, charge at 6% per annum, and you can give a reference of working note number 2 for your calculations. Okay. Next one. See, now this interest on drawing is done. Okay, is there any other entry which is left out? Now net profit they have given. Okay, turnover of the firm we have already used it. So all the entries are over now. Okay, now let us pass the closing entries for everything. Now see one thing. See, this partner's salary, partner's commission, interest on capital, everything is your appropriation. So everything will be transferred to your profit and loss appropriation account. So one option is you can pass separate entries for all. Other option is, see, all these have debit balance. So you can pass a combined entry on 31st March 18. So your journal entry will be combined, transfer entry will be your profit and loss appropriation account debit to interest on capital account, transfer it, everything transfer it to, okay, first was not interest on capital, first was partner's salary. Okay, you can write it in any sequence, that's fine. So to partner's salary account, to partner's commission account, and to interest on capital account, because all are credit only, right? So that's fine. So partner's salary is 2,40,000. Partner's salary is 2,40,000. Partner's commission is 1,00,000. And interest on capital is 1,12,000. So your profit and loss appropriation account is debited by how much? Take a total. 4,52,000. Being interest on capital, partner's salary and commission transferred. Okay, then 31st March 18. Now there is an interest on drawings also. which you need to transfer it. Interest on drawing has a credit balance. It will be transferred on the credit side of profit and loss appropriation. So interest on drawings account debit to profit and loss appropriation account. If it doesn't fit in one line, just take it in the other line. Okay, how much is that? Interest on drawings is 2050, 2050. Being interest, you write it fully, interest on drawing transfer. Don't write it in the short form, because see, if you write it in the short form, again I told you, right, from 75 to 80 you have to be very, very precise, otherwise you will lose all these marks in this. Okay, so if you keep on writing short form now and you think that I'll write it in the exam, you never do that. Okay, so write full from now onwards. Now let us see P&L appropriation account. So P&L appropriation account, what did I tell you? First we will transfer the profit from the profit and loss account. So how much is that? 4,89,950. That's a profit, correct? Net profit. So it will come on the credit side. So profit and loss appropriation account, credit side, by P&L account. How much is that? 4,89,950. Okay, so here what we will do, since it is not a fair P&L appropriation account, we won't be doing it in much detail. Okay, we will just write it and try to calculate the profit over here. Okay, because if they are asking you a fair profit and loss appropriation account, then you have to do it like the way we did it in the previous question. Okay, properly in detail. Now here let us just pose these two entries. See, these are the closing and transfer entries, these two. Let us transfer it to profit and loss appropriation account. So this is, see, profit and loss appropriation account debit to interest on capital, to partner's salary, to partner's commission. So all this will come on the debit side. So on debit side of profit and loss appropriation account, I'll write to interest on salary, to partner's commission, to interest on salary, interest on capital, partner's commission, partner's salary. So how much is that? 1,12,000, 2,40,000 and 1 lakh. 1,12,000, 2,40,000 is salary, na? So I'll write it over here, and 1 lakh. Okay, and then the next entry is interest on drawings. How much is that? It will go to credit side of P&L appropriation. So by interest on drawing, 2050. So by interest on drawing, 2050. Okay, so now take a total and find out what is the profit. Take a total of credit side, take a total of debit side, and tell me what is the profit. Yes, quickly. Tell me the profit. 2 minutes. So how much does this total come to? 0. Then credit side total is more, right? 4,92,000. Here it was something, we calculated it while doing a journal entry, na? 4,92,000 minus, how much was this total? Here it is there in the journal entry, 4,52,000. So profit is 40,000. Now this profit needs to be distributed to both of them in their profit sharing ratio. So I'll just write it as profit. Okay, because this is not a fair one. Correct? Sonu and Rajat. So what is their profit sharing ratio? We have seen, no, it's given in the question, 3:2. So this 40,000 into 3 by 5. I hope you know this maths. 3:2 means 3/5 will go to Sonu and 2/5 will go to Monu. So this comes to 24,000 and this comes to 16,000. So now let us pass the entry. Now see here, this is a profit. So we are debiting profit and loss appropriation account and we have to credit. This is to be given to the partners. Means your partner's capital account will be credited. So P&L appropriation account debit to Sonu's capital account to Rajat's capital account. Let us pass that last entry. So to pass this last entry, we have prepared that profit and loss appropriation account. Otherwise, we won't be able to calculate it. You can calculate it without P&L appropriation also, but it's not easy. Let us keep it in the one format which is convenient for you. So profit and loss, and this has marks, all this working notes also has mark. Account debit to Sonu's capital account and to Monu hai kya? Kaun hai? Who's that other partner? Rajat. So how much was the profit? 40,000. It was distributed in 3:2. So 24,000 and 16,000. So being profit distributed in ratio of 3:2. So A, B, C were partners in the firm, sharing the profits and losses in the ratio of 3:4. Now we have just done 2-3 questions with 2 partners. Now there are 3 partners over here. On 1st April 2017, their balances in capital and current account were as follows. Now this has become little more complicated. You have 2 types of account, capital account and current account. That means it's a fixed capital method. Remember, in fixed capital method, all the entries of partner's salary, interest on drawing, interest on capital, partner's commission will be posted to current account. Capital account may only additional capital and withdrawal of capital. Withdrawal of capital, remember, not drawings. Partnership deed provides for the following: interest on capital at 9% per annum, okay, salary to A at 50,000 per quarter. Now be careful in reading this. Again, this is one of the common mistake. Per quarter hai ki per month hai? If it's per quarter, into 4, per month into 12. Okay, on 1st January 2016, C had given 2 lakhs to the firm at 6% per annum interest. Okay, during the year, their drawings were A 40,000, B 75,000 and C 55,000. On 1st Jan 2018, A introduced a further capital of 2 lakhs. So there is a further introduction by A. Okay, I just note down. I'll just mark here. The net profit of the firm before allowing interest on C's loan was 4 lakhs. So C also, they didn't allow the interest on the loan. Okay, we have to give him the loan. Before that, the profit is 4 lakhs. Prepare profit and loss appropriation account of the firm for the year ended 31st March 2018 and current account of the partner. See now, you can see that there is no definite format of the question. It's not necessary that they will always ask you journal entries. Okay, different things they are asking in different questions. So here they are asking profit and loss. So you were asking, no, that if this format will come, is this the format which we will be using? It's not necessary that we will be using a specific, or they will be asking only P&L appropriation account. Okay, they can ask different types of questions. So whatever they are asking, we have to do that. So profit and loss appropriation account and current account of the partner. So now listen here. What we will do is profit and loss appropriation account format, you know. Current account of all partners, we will be preparing a combined account for all the 3 partners. Okay, that saves a lot of time. Always remember, current account and capital account will be combined ledger account. The way we used to do cash book, cash and bank columns, like that, we will have different columns for all the partners, combined ledger account. So let us prepare a format over here. Profit and loss appropriation account. Okay. So now see here. Now whenever you are preparing a capital or current account, now first thing what you do is you write the balances in the capital and current account. Now they are asking you to prepare current account. So your balance in the current account is all a debit balance. See. So they will come as a on the debit side of current account as two balance brought down. 20,000, 10,000, 15,000. 20,000, 10,000, 15,000. So they are given it as a debit balance. So two balance brought down. Okay, usually capital account has a credit balance. Current account can have any type of balance. Okay, now see. Now first thing, now whenever there is a partner's loan has to go in your profit and loss account, correct? So first thing what you should do is, first see, net profit of the firm before allowing interest on C's loan is 4 lakh rupees. So we have to calculate what is the net profit after deducting the partner's loan. So by profit and loss account. Profit and loss account. See, 4 lakhs is before interest on loan. So how much is the loan? 2 lakhs. It was given in 1st Jan 2016. We are in which year? We are in the year 17-18. So always remember 17-18 is our year. This loan was given in 2016 and it has not been repaid. So from 1st April 17 to 31st March 18, the loan was there for the entire year. So interest will be charged for the entire year. So interest will be 2 lakhs into 6%. So your net profit will be 4 lakhs. Okay. Minus interest on loan. How much is that? 2 lakh into 6%. Alternatively, you can prepare a small working note to calculate profit after interest and you can give a reference over here. Again, I told you these are like part of presentation from 75 to 80. Correct? So how much does the interest come to? 2 lakh into 6%, 12,000. Correct? So 12,000 minus 4 lakhs. Correct? So take that to the outer column. 3,88,000. Okay, so now this loan thing is done. Now what else is, so we have drawings over here and we have capital and then we have some salary. So first is, see, the partnership deed provided for the following. Interest on capital at 9%. So interest on capital is 9%. So what are the capital balances over here? See, this is 4 lakhs, this is 5 lakhs, this is 6 lakhs. But we have marked this. Why? Because A introduced the further capital of 2 lakhs on 1st Jan 2018. So we have to calculate interest on capital for A separately. Okay, as a part of working note. And B and C, there is no change. So we will just calculate 9% on 5 lakhs and 9% on 6 lakhs. So interest on capital will come on debit side. So 2 interest on capital. Okay. So A we will put a working note. So what we can do is, since we are doing some working note for A, we can just write the calculation for everyone in that working note itself. Okay. So working note number 1. Interest on capital. Okay, first let us calculate for A. So A, see here, capital balance was 4 lakhs. Okay, 4 lakhs from 1st April to 1st Jan, that is April, May, June, July, August, September, October, November, December. For 9 months it was 4 lakhs and then it has become 6 lakh rupees. Correct? So, interest on capital for A is 9 lakhs. Okay. Correct, right? Sorry. It is 4 lakhs. Interest on capital on A is 4 lakhs. Okay, 4 lakhs into 9 by 100, and this 4 lakhs was from from April to December. Correct? Jan there was an introduction. So April, May, June, July, August, September, October, November, December. So 9 by 12. Okay, and then Jan, Feb, March, there was 2 lakhs more, so it has become 6 lakhs. 6 lakhs into 9 by 100 into 3 by 12. As I told you, cross check this. 9 plus 3 is 12. So total capital of interest on capital for A. B there is no change. We will just calculate it. So 5 lakhs into 9 by 100. And C, it is how much? 6 lakhs into 9 by 100. Correct? Calculate for A. Fast. Yes, this is 27,000. 13,500. So what is the total capital balance? 40,500. Write it A, B, C. So A is 40,500. Okay, 40,500. Then what was the other two? 45,000 and 54,000. Correct. Let us 45,000 and 54,000. Now listen here. Now interest on capital initial entry. What is the now see here we have to prepare your current account also. Correct. So we have to post these entries in the current account. Correct. So what is the initial entry of this? Initial entry will be your interest on capital account debit to partners. Correct. This is a closing. This is a transfer entry that we have done in P&L appropriation. Initial entry will be transferred to the current account. That is interest on capital account debit to partners current account. So on the credit side of partners current account, we will write by interest on capital. Correct. We are giving it to partners, means they have to be credited. So this is 4,500. Be careful of the columns. Okay. B is 45,000 and C is 54. Am I right? Yes. Done. Now the next one. In salary to A per quarter is 50,000. So salary, see, per quarter is 50,000. So how much will be for year? To partner's salary account, we are giving it to A. Correct. So 50,000 into how many quarters are there? 4. So it comes to 2 lakhs. Now same entry, salary, we are giving the salary. So the first entry is partner's salary to partner's current account. So it will come over here by partner's salary, because we are giving it to partners. So on the credit side, so 2 lakhs. Okay. Now, during the year, drawings were 40,000, 75,000 and 55,000. So see here, now listen to me carefully. Nothing is given about the drawings, correct? Nothing is given about interest on drawings. So in this case, should we give interest on drawings or we should not give? So remember this thing. When interest on drawing is not given in the question, we should not give. Remember the provisions of the Partnership Act. If nothing is there in the partnership deed, then only two things you have to remember. One is they should have equal profit sharing ratio, and second is interest on loan by partner should be given at 6% per annum. Rest of the things are all zero if nothing is given in the partnership deed. So if nothing is given in the question, you should not give the interest on drawings. Okay, you'll remember this. Okay, so now everything is given, everything else is done in the question, right? Introduce further capital is done. We have given interest on loan also. Remember, this interest on loan will be given. So C had given the loan. Okay, even if this was not given, that it will be they are giving the interest on loan at 6%. We would have given that because it comes in right of the partners, and so we are giving it, but there is no such right for interest on drawing, interest on capital. Okay, now let us, so but now one thing, they are saying that during the year their drawings were 40,000, 75,000 and 55,000. Even though we are not giving them interest on drawings, this drawings, whatever is the balance in their drawings account, will be transferred either to your capital account or current account at the end of the year. But since here we are following a fluctuating, in here we are following a fixed capital method, all the drawings will be transferred to your current account. So drawings has a debit balance. Now we have to credit drawings and debit their current account. Don't forget that. Okay. If you want, you can write this here. So drawings in a red pen and write a cloud. Don't forget this. Okay. 40,000, 75,000 and 55,000. Make a cloud. Don't forget this. We have to transfer the drawings entry from drawings account to either capital account or current account. In this case, it's a fixed method, so current account. Don't forget to close drawing. Make a note over here. Okay. Now everything is done. So let us close the profit and loss appropriation account and calculate the total profit immediately, fast. So what is the total of the credit side is 3,88,000. Total of the debit side is 3,39,500. So credit side is greater. So how much is the profit? Yes. Tell me the profit. Tell me the profit and tell me the ratio in which it will be distributed. So calculate the total profit and then calculate how much will A take, B take and C take. They are in the ratio of 3:3:4. Okay. Tell me. Both of you have to calculate and tell me in 2 minutes. So partners, current account. To profit transferred to partners, current account, ABC. Whatever is the profit, what is the ratio? 3:3:4. So 3 plus 3, 6 plus 4, 10. So 3/10. B will get 3/10 and C will get 4/10. It should be 48,500. 3,88,000 minus 2 lakh minus 1,39,500. What mistake did you do, Nishevita? So 48,500 into 3/10, 48,500 into 3/10, 48,500 into 4/10. This comes to 14,550. 14,550. 19,400. Neil, what about you? Okay. What about you? You are not calculating?
Mom, I was doing the C.
Do it.
I got all the values.
Okay, Nishivita understood, right? Now, this is a partner's profit. So, partner's profit means given by firm to partner. So, credit side of the current account by profit and loss appropriation account. Okay. So, 14,550, 14,550. 19,400. Now we will close our partner's current account. So see here, some partners may have a closing debit balance, some partners may have a closing credit balance. Now you have to see that for each and every partner. Okay, so calculate for A first. So A, how much it is? See, A has more of a credit balance. You can see it from here only, right? It is 2 lakhs. 2 lakh plus 4,500 plus 14,450, correct? $14,550 plus 4,500 plus 2 lakhs. So you can see that the credit side is more for A. So 2 lakh 55,050. So you will have to balance carried down for A. Okay, now what you have to do is by balance brought down for A will be, this is 1,95,050. Calculate for other two. So B, you can see that debit side is more. So this is 85,000 and this is 85,000 minus this one. So remember to balance it correctly. Go one by one partner at a time. Okay, so A is credit balance, opening credit you have got. B, you have got it on that side. So 85,000 minus 45,000 minus 14,550. So B, you will have it here over here. So next year, whenever you are opening, B will come over here. And C again, C also this side is more, you can see. $73. Yeah, check it. Yes, check if this is correct. So, see, so in capital or current account you may have like a debit or credit balance sometimes. Usually what happens is all assets will have opening debit balance, all liabilities will have opening credit balance, correct? But in capital, not if it is a fluctuating capital method, usually you will have credit balance only. In fixed capital method, capital will have a credit balance, but current account may sometimes be debit or credit. Remember that. Okay, so don't get confused over here.